We have a great guest, Jeff York at Pivotal_Points. And in fact, before I bring Jeff on, let me grab the screen from you and I'll show you what kind of people follow him. All right?
Definitely. Please do.
Huh?
Yeah, please do. Please do. Take the screen.
I'm going to. So I went to Jeff's website, and I'm going to go to Jeff in a minute, but I just wanted to show what I had here. Here's Jeff. Okay, and you know, he's a veteran. Look, he's got some gray hair, seen a few cycles. But check this out, you know, Peter Brandt, Abigail Doolittle, you know, a lot of people that are gurus in their own right follow Jeff. So Jeff's a great follow. And I'm looking forward to speaking to Jeff. I spoke with him once before. It was at FX Street. So without further ado, I would stick around for these pivotal points. I think they're going to play a great role in the upcoming days and weeks ahead into the fall and into the winter. So Jeff, perfect. Thank you for taking.
I'm really looking forward to the interview. Enjoy, Dale.
Okay. Thank you, Steve. Nice work today. Great call on avoiding the euro pound and now having some ideas about what to do with it. And I think you made us all very well prepared for Jackson Hole tomorrow with your views. So great job, Steve. Okay, Jeff, I'm making you the presenter here. So I'm looking forward to hearing your voice again. I think it's been a few years and seeing your pivotal points. There they are. Hi, Jeff.
Hi, Dale. How are you?
Oh, great, buddy. It's so nice to have you back. Thanks so much for being open to being interviewed by me more than once.
Well, thank you for inviting me back. It's a pleasure.
So, were you in Colorado for the eclipse or in Florida?
I'm back in Florida. I was in Colorado for the month of July. It was cold. It was rainy. Highs were only in the 50s and 60s, so I was freezing. I came back.
Yeah, global warming. You know, I'm in the high desert in Temecula, California, and compared to last summer, this is the coolest summer I could remember. Hardly needed my air conditioning. It's kind of strange. You know, there are some guys I interview that think we're headed towards, they're big bears, secular bears in what's happening with the economy and stuff, but that we're actually heading towards a cooling period and maybe even a mini ice age. So anyway, this is the coolest summer I can remember in Temecula, California. So it was hotter at the beach. So great to have you with us.
Thank you.
I read the bio that someone from a pit trader from Goldman is what got you going on looking at pivots.
Yeah, back in, I started trading in the mid 1990s when a monkey could trade and whatever you bought went up. AOL was up $10, $20 every day, and Broadcom and Cisco and a lot of those companies. So when I started trading, I thought I was a genius because I was just printing money every day. And then I got hit with the 2001 correction. And I had never been through a correction before, so I thought it was just a typical pullback, and lost and gave back a lot of the money. And then I met a Goldman trader, and he said, you know, and I started trading ES minis at that time. He says, you know, I trade in the CME pit, and we put pivot points on our charts, and that shows us where to buy and sell. And that was always my biggest problem as a trader, was identifying where is the best buying point and where is the best selling point, without having to guess and drawing lines and using the moving averages that I wasn't having very good success with. So the pivot points really helped me a lot as a trader, identify where to get in and where to get out.
So let me ask you this. People that look for a lot of pivots, they're trained to look left for supply demand zones. Is that part of it, or how do you calculate your pivot? With
the pivots are a quantitative math calc, actually. They're based on the previous period's high plus low plus close divided by 3. So if we're using daily pivots, we're just looking at the previous day's high plus low plus close. If we're looking at weekly pivots, it's the previous week's high-low close. If we're looking at monthly pivots, the previous month's high-low close, and yearly pivots would be the previous calendar year high-low close.
Okay, well, it's simple.
Yeah, it really is. It's just a quantitative math calc, and based on previous high-low close, it's pretty simple. And it seems to have a lot of black box computer algorithms seem to use them a lot because they're just uncanny the way that price pivots at these pivots. I don't know how else to describe it.
And you know, it shows what a giving spirit you are, because you could have said, oh, well, Dale, that's proprietary. But,
Well,
you know, I've always said, Jeff, if you can add and subtract, divide and multiply, you could trade. What do you think?
I agree. Totally agree. I mean, pivots are not, you know, they're a free indicator available on most charting platforms. I'm just showing people how I use them to make money.
Okay. So we're looking at this REZ. What does REZ stand for?
It just stands for resistance. It's just an abbreviation for resistance. So here's my S&P 500 chart. Earlier in the year, back in February and March, it came up to the yearly R1 pivots here. These are yearly pivots on this chart. And you can tell a yearly pivot because it spans the whole length of the year. The yearly pivot is good for the whole year. It doesn't change. It's good from January 1st through December 31st. So the S&P really respects the pivots, came up to the yearly pivots back in early March, we can see here. Pulled back, and then we broke through, and now we came up to these yearly pivots, and now we're pulling back. So I'm looking for this pullback on the S&P 500 to come back down to this 2400 level. And one of the things that I'm seeing as a possibility here too is a long-term head and shoulders topping pattern on the S&P 500 developing.
Interesting.
This could be possibly the left shoulder. The head was made recently, last month and this month, and if we come down, bounce off of this 2400 level, come up, make a right shoulder, and then close below 2400, that would be the neckline on the head and shoulders topping pattern.
I'm curious, Jeff, how were you able to identify the resistance level in the S&P since we had never been there before?
Well, again, the pivots did it for me. It's the math calculation. So the charting software automatically draws these support and resistance lines for me. I don't draw these lines. The charting software.
It was predictive before it got there?
It was predicted on January 2nd, pretty much, yes.
That's amazing.
Yes.
And it saved me a lot of grief.
Well, so we knew back on January that the market was going to come up to at least 2400, and then we were going to have a pullback there. And that's exactly, we got a nice 80-point pullback at that back in early March. And then we knew once it broke through that level back in early or late May that the next level was going to be 2482 to 2492, and that's exactly where we came. And now we pulled back again. So it's amazing how canny these yearly pivots work for the biggest trades. And I've learned over the years that the biggest reversals during the year occur at yearly pivots. So we use yearly pivots for our long-term view. We use monthly and weekly pivots for our shorter-term views.
Who's we?
My clients, my traders.
I thought maybe you had a split personality. Sometimes when I say we,
my evil twin?
Yeah, sometimes when I say we, I'm going, why am I saying we? It's me. It's my thought. But anyway, I thought I'd throw it out there. But it's good to say we. It sounds like we have a huge research team in a huge office going over, you know. You don't need that. You don't need that.
I'm a one-man show. I have 100 and some subscribers that subscribe to my my service. A lot of them are hedge fund portfolio managers from around the world.
I would bet you're going to have at least one more after this forecast, especially since, you know, the yearly pivots that you brought up could have saved people so much aggravation and heartache just sitting back and trading in between those pivots. So now we're looking at quarterly here.
Well, now we're looking at, we have quarterly and yearly pivots in this area here, but you know, I'm just showing you a candlestick chart. But here we have the monthly pivots. The M stands for monthly, and you can see these little shorter pivots. These stands for weekly. So when I look at a chart, I can see the short term using weekly pivots for support and resistance. I can see medium term using the monthly pivots for support and resistance. resistance, and I can see the long-term view using the yearly pivots for support and resistance.
Right. So we're kind of in between a few. What's the interpretation? I know you said that perhaps we could have a head and shoulders, but we would need another touch of yearly pivot.
Yeah,
and then a bounce for that to happen, right?
Yeah, it needs to come back down and retest this this 2400 level, in my opinion.
Okay.
Yeah, but for today, this week, we're watching this 2440 level, the weekly pivot here. Yesterday's high was right at the monthly pivot at 2454. So today I'm looking for a pullback to the weekly pivot here. Let me see if I can pull it up a little bit closer for you guys. And I'm looking for resistance at 2460. So I'm just using.
That's a Mr. Magoo chart. Do you remember it? Are you that old?
I am.
Okay, yeah, Mr. Magoo. Anyway. So great look on the S&P, and kind of you can imagine a path it might take. I noticed that on your website that you also pay attention to what our bailiwick is, currency. And, you know, it was a pretty surprising move to most. Now, I have to admit, not us, this weakness in the dollar and the strength in the euro. Unless you want to stay with the S&Ps, I'm interested in your take on euro, some of your yearly pivot points and so forth.
I don't do a lot with currencies, but I do the euro dollar and CAD and a few of them, but I don't do a lot with currencies. But the euro does love dollar does love the pivots. I'm looking for strong resistance. This past week, last week, the euro came back and pulled back to the monthly pivot, the MP. This was our support zone here at $1.66, $1.1666. Excuse me. This is where I was recommending to add to your position, and this is where I see the euro going to the yearly R2 pivots up here at $1.20 to $1.21. This should be strong resistance for the year on the euro dollar.
Okay, that's monthly, yearly.
We have monthly,
weekly,
yearly, and weekly. Right, so we have a strong confluence of pivots up here that should be strong resistance when price gets there. Pivots only show me when price gets there that it will pivot. It doesn't tell me when price is going to get there. Right. It doesn't show me the route that price is going to take to get there. But I do know when price gets here that I've got these are R2s, I've got an 82% chance of price failing in there. So.
Wow. Yeah, so that's a pretty good percentage to go with. So
exactly.
Do you find with your method, since I don't think you go beneath daily pivots, do you ever drill down any further, like 4 hour, or is daily the shortest pivot zones that you pay attention to?
Daily is the shortest that I go to. Here's my intraday chart on the euro that I have open, and we can see so far today the DR1 stands for daily R1 pivot. So I do use daily pivots on my intraday charts. I don't personally like to trade the daily pivots because I'm not a day trader. I'm more of a swing trader and a position trader. So I like to take trades on the weekly and monthly or yearly pivots.
All right, so you have to be a pretty patient guy, Jeff, because I'm assuming with this that there are a lot of times you're out of the market.
There's a lot of times I'm just sitting waiting for price to come up to a weekly or a monthly pivot to take a trade. Absolutely.
So was that something that was difficult? I know it's difficult for a lot of people to, you know, Tom Petty says the waiting is the hardest part. It is for me too. And how were you able to discipline yourself? I mean, losses will discipline you if you don't wait for setups. And you know, I kind of have a deal with our community that they don't take a trade they haven't planned at least a day in advance. So, how were you able to become patient? Because most of us are not born with that inherent trait. Was it just belief in your numbers enough to say, you know, why even mess around when I don't have anything here?
Well, I've learned over the years that, making too many trades can be like a dog chasing its tail in a circle. You're up, you're out, and I don't like to trade for 20, 30, 40 cents. If I'm looking for the low hanging fruit, and the low hanging fruit for me seems to be at the weekly, monthly, and yearly pivots. And so that's why I wait for those trades. Yes, it was hard at first, but after trading for 20 years and being a day trader for half of those years, it's much nicer now being able to relax and not chasing candlesticks. You know, it's up, it's down, it's up, it's down. It's just so much easier now setting alerts, you know, at the weekly pivots or the monthly pivots and just waiting for price to come to you.
So you can't teach that. That, you know, that's experience. It only comes with the passing of time. And, you know, you did it, been there, done that, may have liked it when you were a younger guy, more testosterone flowing in your system. But now you're talking my speed now too, Jeff. And, you know, sometimes when you have a daily community, people are always looking for something to do. And I remember earlier in my career, I would press to try and find something to do to entertain people. Now I say, you know what, I'd rather bore you than press to come up with an idea, because the good ideas hit you right in the face, don't they?
Absolutely. And a lot of times I've learned that the day traders miss the big moves, and a lot of times the big moves happen in the middle of the night. You know, how many times have we woken up when we've seen, you know, we're down to 300 or we're up 300 or 400 points. So, you know, and if you're a day trader, you're sitting there, you know, waiting for an opportunity to buy or sell, where if you're a position trader, you're already in that position.
Let me ask you this, as far as money management, when you have signals at your pivots, do you go all in with your position on the initial entry, or do you piece yourself in waiting for more confirmation to build a position?
I scale in. For instance, here's the SPY. Let's bring this up real quick.
All the best guys I've interviewed scale.
Yeah, I've learned, because I just don't know if this, you know, 248.70 or the 249.70 pivot is going to be the showstopper. So I'll buy some puts here, I'll buy some more puts there. So that's the way I like to work, is I'll scale in on the different pivots, especially when I have a few pivots that are close to each other.
How about coming out? Same way?
Same way, exactly. I always like to keep a runner. Exactly.
Okay, and for risk management, in case the pivots don't hold, are you waiting for, if you're using a daily pivot, you wait for closes on the daily to tell you you're wrong? Or if you're using a weekly, you look for closes that negate that pivot point to get out?
Yeah, I'll watch on the weekly pivot. If price goes over it, you know, during the day, that would be my signal to get out. Exactly.
Okay.
But I don't use the daily pivots very often. I use more weeklies.
Okay, so I have a question, and you already answered it, but I'm wondering if you could do it again. Can you ask how the math calculation is of that pivot levels? We understand. Go ahead.
Yeah, the standard pivot math calc is the previous high plus previous low plus the close. So the previous, if you're looking for a daily pivot, it would be the previous day's high plus the previous day low plus where it closes. And you add those three together, divide it by 3, and that gives you the pivot, the P. And then once you have the P, you can go and figure out where the R1 and R2 levels are and the S1 and S2 levels are. But the easiest way, I don't do pivots manually. You know, every charting program today has pivot points built in as a free indicator. So just let your charting do the calculations for you.
Okay, great, Jeff. And do you look at gold as an asset class? Is that coverage in gold part of your service?
Big time. Here's my gold chart.
Yeah, I'd like to see this. So we're at it's been stalling at the monthly here.
Yeah, here, let me go to a year-to-date chart here on gold. Let me we can look. So the long-term picture on gold is it came down this yearly pivot. This is on the December contract. So we'll say right around 1,200 on gold cash has been the yearly pivot, and that's held all year as prices come down. So that tells us that gold is going to come up to the yearly R1 pivot sometime this year, which is at 1326 to 1350. So this is where we're expecting gold to come up to. Currently, on a shorter term period, gold right now is testing strong resistance here at the monthly R1 pivot. And so we're looking for resistance this week on gold between 1297 and 1308. And
so would you look to buy the pullback to weekly support 1 and 2 should it happen?
Yeah, if gold, yeah, I don't want to be a buyer here of gold, but if gold comes
Right.
back down to this 1250, 1274 level, well, the weekly pivot's going to expire here in a few days, so I probably
Right.
won't do that. But if it pulled back to this 1250 level, absolutely, I'd be a buyer there with a target up here, you know, at 13 and a quarter to 1350. But if we don't get a nuclear war, I think 1350 would probably be the best case scenario on gold. If we get a nuclear war, you know, that could go a lot higher.
You know, it's just weird that we're even talking about it.
I agree. It's even sick that we're talking about it. I agree.
Yeah. So, but you know, brave new world, right? You never know. I mean, let's face it. Has man ever created a weapon that he only used once? So,
Exactly.
Anyway,
Here's same thing with GLD. Here's a GLD chart. As you can see, GLD found support this year right at this 114 level. So best case scenario, we're looking for GLD at 124 to 126 this year.
all right. The bonds have been pretty confusing for people. I'm interested. Treasuries or TLT, what your look may be on that. So it looks like we have TLT here, right?
Yeah, here's my TLT chart for the year, daily chart. TLT came down to the Fibonacci yearly S1 pivot back in March, and then it rallied back up to the yearly pivot here. Right now, TLT's got resistance between, it's right around 127.50. We're pretty close to there. 127.50 is going to be the monthly R2 pivot. We got weekly R1 here. So short term, look for strong resistance here at 127. Longer term, it could go up back up to 131. 132 is DeMarc's high pivot. We got Woody's yearly R1 pivot up there. So
is that short of the all-time high or close? I think the all-time high was 35 or so. That would still be a lower high.
Yeah, the all-time high is at 144. Yeah. So it could come back up to this 130. There's a big gap up here too at 130.
Yeah, that was the election.
Right. Exactly.
Okay. So yeah, I thought that we'd go back there and try and fill that gap eventually. How about crude, Jeff? I mean, you know, you're talking about war. I was interviewing Kirk Spanos this week, and Kirk thinks that things are set up that the next conflict is going to be with Iran sometime in the spring of next year, and he's looking for a major bull move. But the current setup with COT is large specs are longer than they were when crude was over 100. Right. And the commercials are pretty short, so wondering where you have some yearly support levels and stuff on that.
Well, so far crude has been holding the yearly pivot down here. Oh, this is gold. Sorry, let me go to crude.
Yeah.
Here
I was thinking maybe we could go under 40 one more time, but okay.
That's possible. This is on the V contract.
Okay.
But the yearly pivot on crude oil, and I can't pull up the old contract because it's already expired, is at 42.50, and that's exactly where we bounced off of here, 42.50 back in June, and then we rallied up to $51. I wonder if I still can have that CLQ17 if it's still in here. Here we go. This was, even though this is expired, it's easier for me to explain. But on this contract, so crude, I think, is going to hold this 42.50 level, and I think it's going to come back up to this $50, $52 level. The yearly pivot on crude is up at $56. Crude has, remember, futures have two sets of pivots. We have a continuous contract, and we also have the regular contract, and so futures sometimes can be a little bit difficult when trading the pivots because we have two sets of pivots and we have to look at two different sets of pivots. But I think this gentleman is correct. I'm bullish on oil. Some people are seeing a long-term head and shoulders, like Peter, who thinks it's going to fall. But I do see something happening with Iran possibly that could cause the war premium to come back into the cost.
Yeah, there's absolutely no risk premium in the price right now. Zero. Exactly. What a great interview, Jeff. I mean, you know, I really like your, you know, the way your demeanor and the way you explain things, and simple is better, you know. Call me Forrest Gump, but I like simplicity.
I do too.
So let's talk about something complicated like Bitcoin.
Okay, Bitcoin. Yeah, here's my Bitcoin chart, and this is for my subscribers. And Bitcoin pulled back earlier this week, right to this 3,600, 3,650 level, which was identified. We have a weekly and a monthly pivot here, so that created a short-term support zone. And we're looking for Bitcoin to come up this week to 4,360 to right around. It's like 44.44, and that's going to be the resistance zone. This is just for short-term swings. Now,
have you traded it personally yet?
I have not. I have.
Okay.
I just filled out the application at Coinbase, and I'm getting ready to transfer some money over there. But I personally have it. I think this whole crypto thing is going to crash someday huge. I think it's the millennials' pet rock. That's
okay. All right. So maybe I've been using the parallel like .com stocks when you first started trading, and even though most of them melted away, we ended up with some stalwarts that rose from the ashes.
Yes.
So that would be a scenario where I would get involved, is if we ever had what you said happens. I don't know what potential catalyst it could be. I'd have to think it would be the government.
Yeah, or it could be one of the big banks getting hacked, one of the and people getting scared and pulling their money out.
Yeah. So you wrapped it with Bitcoin. Do you have your head wrapped around it? I mean, I've heard about it for years, and we had a blow off a few years ago before this. So are you a believer long term in this technology, that it's going to become
an alternate
currency?
I don't believe it's going to become an alternate currency. I am a believer in the blockchain technology, and I believe that will be implemented with every business, banks, and governments. Someday, but I don't believe they're going to use the Bitcoin or any of the other technology, because IBM and SAP are developing their own blockchain technology, and I think that's who the big banks and the governments will end up going with.
Do you think that the governments might be letting this experiment go on because, just like India, a lot of governments would like to know about every transaction, and going cashless would be the way for them to do it?
Sure.
Okay. So that may be why there's been no interference to get people to become acclimated, embrace it, and then it won't be a big shock like it was for people in India.
Right. But, as a consumer, do I really want to have a currency that could fluctuate 20, 30, 40% daily?
I couldn't handle it.
I couldn't handle it either. I mean, you go to the grocery store and you don't know what the price of milk's going to be.
But from one aisle to the next.
Exactly.
That's a great point. So, Jeff, I want to thank you again, buddy. Why don't you show your website so people can know how to follow you and possibly subscribe and get your pivot points?
I also want to also let you guys know that I do a morning video, a pre-market video every morning for my subscribers, and I just started a new subscription service on Primo Social with Josh Brown and Scott Redler and Sentiment Trader and Bespoke and a bunch of others. And so my pre-market video, where I go over the support and resistance pivots for that day on the spiders and QQQs and Euro dollar and Bitcoin and stuff like that, is now available on this site. And my website is pivotalpivots.com.
Yes.
And I'm bringing that up right now. Here we go.
Stop guessing. Oh, when I see a picture of the floor, that's the NYSE, but
exactly.
Gosh, I miss it. Don't you miss it?
I don't.
You don't want to throw an elbow or anything to get and come in without trades the next day?
No, I have a couple of clients up in New York City and Connecticut that would love me to come work for them up there, but I just can't see myself living in New York City or Connecticut.
Yeah, it sounds like you have a nice lifestyle between Florida and the ocean and the mountains, buddy.
Exactly.
So congratulations on living the lifestyle that you probably dreamed of when you were early in your career, and great work, and appreciate you edifying our community today, Jeff.
Well, thank you for inviting me and having me today, Dale. I really.
All right, you're my trading warrior brother, buddy. Don't forget it.
I won't.
All right, Jeff. Thank you very much. Everyone, thank Jeff York. Definitely worth paying attention to. At the minimum, follow him. And I'd consider subscribing and getting great content from Jeff York. So thank you, F.A.C.E, and thank you, Steve and Stell, and everyone. Have a great day. Tomorrow I have an interview with a fairly well-known guy. It'll be my first interview with him. It's David Everett at Trade Ideas. Be tough to top Jeff York. But thank you, everyone. You're very welcome, guys.
Thanks, Dale.
You're very welcome, Jeff. Remember, don't just count your pips, count your blessings. See everyone tomorrow.